Jacqueline Kreider, PBJ Mortgage, making mortgage simple, as simple as making a peanut butter and jelly sandwich. A question I get asked a lot is, how long should a mortgage be for? It's a really, really good question. How long can mortgages be? Also a really good question. So, it's an excellent question on how long a mortgage should be and what kind of choices and options there are when it comes to mortgages as far as the term, the length of time that the loan goes for, right? So number one, the typical traditional standard mortgage is going to be 30 years, right? So most people, what they think of when they think of a mortgage, it's going to be a 30-year time window, right? So it starts when your first payment is due, and then after 360 months is up, aka 30 years, then you are going to be done paying the mortgage. Does that mean you have to pay for the whole 30 years? No, you could pay it off early. You could sell the house, you could refinance it. There's tons of other choices, but it means that the amount of time that they stretch the payment over is going to be 360 months, aka 30 years. So if you're talking about what is the most standard choice, that is the most standard choice, right? Is going to be 30 years. Now, do you have other choices? The answer is yes, you do have other choices. So what are your other choices and why might you pick that option over a 30-year option? So another one that's pretty standard is going to be 15 years. So that's obviously half the time. It does not necessarily mean that the payment will be double, but it may be kind of close to double, okay? The reason that it may not be completely double is a few factors. Most mortgage payments include taxes, homeowners insurance, possibly private mortgage insurance or PMI, right? Those things are going to be like at least the taxes and the homeowners insurance. Those factors are going to be the same regardless of whether you do a 30-year mortgage or a 15-year mortgage, right? So that's why it's not necessarily going to be truly double. Like in Texas, our property taxes tend to be a little on the higher side, and so they make up a really good chunk of that payment. So in a 15-year loan in Texas, likely it is not going to be double the payment of a 30-year loan. Okay, so just kind of as an FYI. Also, if you are talking about private mortgage insurance, which I've done a video about what that is and how it works, on a 15-year loan, because you're going to be cutting down that loan so much quicker, actually that payment will be less, the PMI will be, right, than if you did it on a 30-year loan. So those are a couple of things to keep in mind, right? Why would you possibly do a 15-year? Well, maybe you want to pay it off quicker. Some people can't afford it, like when they're trying to get into a house, right? It's a little bit more difficult. Or some people like the control. So I always tell people, if you're not really, really sure you're going to be able to afford that 15-year payment, right, then you want to go ahead and take the 30 and you can pay more. No one is ever going to get mad at you for paying more than you have to pay. So if you make double the payment or a couple $100s a month or whatever you want over, no one's going to be upset at you and like, hey, Mr. Homeowner, I can't believe you paid extra. But you know what you can do? You can't not make the whole payment. So if in doubt and you're trying to decide between like a 15-year loan and a 30-year loan, go ahead and pick the 30 because you can always pay extra. Why else would somebody maybe pick a 15-year loan option? Usually, now not always, the rate tends to be a little bit less on a 15-year note versus a 30. So just kind of as an FYI. There is times if the market, like, because this is all based on market conditions, guys. There's times where the 30 and the 15-year loans are not that much different actually in pricing. We have had that happen. So when you're asking yourself, well, is it always going to be a lot lower? Maybe. I've seen it be a lot lower, like a good chunk, like a quarter, a half, even maybe a whole percentage point. And then I've seen them be almost nothing, like maybe an eighth of an interest rate, right? So it'd be like 0.125%. So very, very marginal. So you have to look at all those factors when you're considering on which one to pick. You also can go ahead and pick like a 20-year loan. Some mortgage companies also offer loans in increments of 5. So like a 25-year, a 20, a 15, a 10. Almost no mortgage company offers a 5-year. The reason why most mortgage companies do not offer a 5-year loan term is there is not enough meat in that. As in, you're not going to pay them enough interest. So usually the shortest term you're going to find is going to be about a 10-year. Okay, so 10 years, 120 months. That's going to be about the shortest loan term you're going to find. Some mortgage companies only offer 30, 20, 15, 10. That's it. Some, like I said, will offer like a 25-year option. Understand that a lot of times a 25-year note and a 30-year note, and by note I mean the length of time that mortgage has to pay out, the actual interest rate is not going to be any different. So again, with my customers, I'm typically going to argue, pick the slightly longer term. It gives you more flexibility, and then force yourself to make whatever a 25-year loan payment is every single month. Pay that extra towards your principal loan balance, and then that will have you paid off in that 25-year window. It's very important to note that I highly recommend you pay anything extra to your loan. So even if it's $50 a month, $100, double, whatever it is that you can go ahead and put towards that loan, you go ahead and do it. Why do I say that? Well, the reason that I go ahead and I make that recommendation is your taxes, your homeowner's insurance, it is always going to be going up. Unfortunately, that's just life, right? Very rarely do we have decreases in those things. Occasionally we do. Occasionally we'll have a property tax decrease or a homeowner's insurance decrease. But I would say 9 times out of 10, you're going to see increases in those amounts. If you go ahead and you're making a little bit extra towards your payment, when those numbers increase, you sort of insulated yourself from a budget perspective on that front. So I highly recommend my customers go ahead and pay a little bit extra to principal if they're able, so that they sort of already get their budget and the mindset of a little bit extra, right? And you're going to go ahead and you're going to cut off your term. The other thing important to remember when you're looking at 30-year mortgage, okay? Pretend you've got 2 triangles, right? Equilateral triangles, so exactly perfect on all 3 sides. And you take one and it's pointing toward the ceiling, and you take the other and it's pointing towards the floor. Now you shift them together. That big fat part of the triangle up here on this side, right? That is your interest at the beginning of a 30-year loan. And that little teeny bit of the triangle on the other side, that is going to be your principal. As time goes on, you're going to pay less to interest and more to principal. If you can escalate at the beginning of your loan term that amount you're paying to principal, right, you're obviously going to start hopping down the triangle a lot faster. So the first 5 years of your loan is the most important time you can pay extra. So if you're considering, hey, should I pay extra? How much extra? I would tell you, yes, you should pay extra if you can afford it. Again, that's always a very important factor. Make sure you're not putting yourself in a bind by paying extra. If you can't afford it, go ahead and pay extra, and the first 5 years, so those first 60 months of your loan, are the most important time to pay extra. Okay? The other factor in, like, I get asked the question a lot too, how much time is that going to cut off my loan? If I pay extra, is it going to cut off, a year, 2 years, 10 years? Again, I'm going to go back to the old thing that it depends. There's great calculators that you literally can plug in how much you're going to pay extra, what your interest rate is, how much time you've got left, etc. And it'll tell you if you pay $10 a month extra, $50, $100, whatever it is, and it'll tell you how many months it cuts off. The reason it depends, guys, is it depends on your interest rate. So if you were paying a home loan, hypothetically, at let's say a 10% interest rate, obviously that's not what they are right now, I'm just saying hypothetically, okay? And then let's say that somebody else is paying 5% interest on their home loan. The differential between those two on how much extra it's going to make in time is going to be huge for the guy that's paying 10% versus the person who's paying 5%. Okay? It's going to be a lot bigger of a deal. Does that make sense? So it's very important to just keep in mind that the amount of time it's going to cut off is going to be directly reflected on how high or low your interest rate is. But there's excellent calculators that will absolutely help you do that. Any good mortgage professional can help hook you up with those kind of calculators. I believe we may even have one on our website. So it's a great tool to kind of go ahead and look into. So when I get asked the question, what kind of loan terms are there? Most standard is going to be your 30. Next most common is going to be a 15-year. But a lot of companies offer roughly every break of 5. So 30, 20, 15, 10. Occasionally you'll see a 25 in there. It just depends on the company. So hopefully this was helpful. Please go ahead and make sure you click the subscribe button or the like button so that you can continue seeing more videos just like this. Thank you.